Your insurance company just took a satellite photo of your roof, not a person, not an inspector with a clipboard and a handshake, a satellite or a drone. And based on what their AI algorithm thinks it sees, moss on your shingles, a tree branch within 10 feet, a shadow it misread as a crack, you might get a letter this month telling you you're dropped. I spent 20 years building risk assessments for Fortune 500 companies, and I can tell you, when the people evaluating your risk have never actually seen your house, you've got a problem. Let's fix it. Here's what's happening. Homeowners insurance premiums are projected to jump 16% between 2025 and 2027. The average national premium has hit nearly $2,000 per year, and insurance now eats about 9% of the typical mortgage payment, the highest share ever recorded. But the price isn't even the scariest part. The scariest part is the cancellations. Insurers are moving away from statewide risk models and toward hyperlocal zip code modeling. They're using satellite imagery and AI to identify specific neighborhoods, sometimes just a few blocks, that they've decided are uninsurable. State Farm, Allstate, Farmers. The big carriers are quietly redrawing their maps. In California alone, more than 400,000 policies have been canceled since 2021. In corporate business continuity, we call this vendor concentration risk. When a critical service provider pulls out and you don't have a backup, your home insurance is a single point of failure. And most households don't realize it until the letter arrives. So here's the first thing you need to understand: your aerial profile. This is a term from the insurance industry that most homeowners have never heard. It's what your property looks like from above, from a satellite image or a drone photograph. And in 2026, this aerial profile is the single biggest factor determining whether your policy gets renewed. Insurers are scanning roofs from space, not exaggerating. They're looking for aging shingles, moss buildup, overhanging branches, ponding water, tarps, discoloration, anything their algorithm flags as elevated risk. And here's the kicker: the AI gets it wrong. Homeowners are being dropped because a shadow looked like a crack, because moss showed up as structural damage, because a tree that's 15 feet away looked like it was touching the roof. In my corporate world, we'd never make a shutdown decision based on a single data source we hadn't validated. But that's exactly what's happening to your house. Here's your homework for this section. Pull up Google Earth. Look at your house from above. That is roughly what your insurer is seeing. If your roof looks rough from that angle, clean it up. Trim branches within 10 feet of the structure. Clear debris. Document the current condition with a dated letter from the contractor. That letter is your first line of defense. If this is the kind of practical, no panic preparedness content you've been looking for, hit subscribe. I do this every week. No bunkers, no bug out fantasies, just the plan. Now, what happens when the letter actually arrives? In most states, you have a 60-day window from the date of a cancellation notice to respond. This is critical. Most homeowners panic, stuff the letter in a drawer, and scramble for a new policy. That's the wrong move. During that 60-day window, you can file an appeal. And here's what that appeal needs: a current contractor's inspection report that contradicts the aerial assessment. If the insurer says your roof is too old and you have a certified roofer who says it has 5 to 8 years of life left, with documentation, you can fight. Permits from recent repairs, receipts from maintenance work, photographs with dates, all of this is ammunition. In corporate continuity planning, we refer to this as a challenge protocol. When an assessment comes back wrong, you don't accept it. You counter it with better data. The same principle applies to your house. Your action step: if your roof is under 10 years old, find those receipts and permits right now. Put them in a folder, digital and physical. If your roof is over 10 years old, get a professional inspection and a written assessment of remaining life. This is your paper shield. Here's where it gets really dangerous. Even if you keep your coverage, there are 3 gaps in most homeowners' policies that catch people completely off guard after a disaster. Gap number 1, the rebuild cost gap. Your policy might cover what you paid for your house, but rebuilding costs have jumped roughly 30% since 2020 due to material price increases, labor shortages, and new code requirements. If your house burns down, the check your insurer writes may cover only 60 to 70% of what it actually costs to rebuild. That gap comes out of your pocket. Gap number 2, ordinance and law coverage. When you rebuild, you have to meet current building codes, not the codes from when your house was originally built. Most standard policies include only 10% ordinance coverage, which is almost certainly not enough. If your area has adopted new wind resistance or fire hardening codes since your house was built, you could be looking at tens of thousands of dollars in upgrades that your policy won't cover. Gap number 3, contents depreciation. That piano you bought 15 years ago. Without an appraisal and a receipt, your insurer might offer you $500 for it. The jewelry, the electronics, the furniture. If you can't prove what you paid, you get depreciated value, which is insurance speak for almost nothing. Remember when your parents kept every receipt in a shoebox in the closet? Turns out that was genius-level risk management. They just didn't call it that. Your action step: call your insurer this week and ask 2 questions. 1, what is my current dwelling coverage limit, and does it reflect today's rebuild cost in my zip code? 2, what is my ordinance and law coverage percentage, and can I increase it? Now, worst case, you get dropped and the big carriers won't take you. What do? First, do not let your coverage lapse. This is the single most dangerous mistake. If your coverage lapses, your mortgage lender will buy a policy on your behalf. It's called forced placed insurance. It protects the bank's interest, not yours. It covers the structure only, not your contents, not your liability, not your living expenses if you have to relocate. And it costs 5 to 10 times what a standard policy costs. They add it to your escrow and your mortgage payment explodes. Instead, look into the excess and surplus market called E&S lines. These are specialty carriers that insure risks the standard market won't touch. They're more expensive than standard policies and have less state regulatory oversight, but they are a real safety net that keeps you covered while you work on getting back into the standard market. Every state also has a FAIR plan, an insurer of last resort backed by the state. It's basic coverage. It won't be everything you want, but it's coverage. And coverage beats no coverage every single day. In business continuity, we always build a primary, a secondary, and a tertiary plan. Your homeowner's insurance should work the same way. Standard carrier is Plan A. E&S market is Plan B. State Fair Plan is Plan C. Know all 3 before you need them. If you own a home and you're wondering whether your flood coverage actually covers flooding, spoiler, it probably doesn't. I've got a video on that coming soon. I'll link it right here when it's live. So here's where we are. Insurers are using AI to scan your roof from space. They're redrawing maps by zip code. Premiums are climbing, and the coverage you think you have may not actually cover what you think it covers. But you can fight back with better information. Know your aerial profile, understand your 60-day appeal window, close the 3 coverage gaps, rebuild cost, ordinance and law, and contents depreciation. And always have a Plan B and Plan C for your carrier. Your one homework assignment tonight: open Google Earth, look at your roof from above, and ask yourself, would an algorithm drop me? If the answer is maybe, you've got work to do this weekend. I'm Ernie. This is Prepared Not Paranoid. Build the plan. Skip the panic.